All right, hello everybody. So we're just going to go over the markets and what trades were available today. The first is on crude, and then I think I'll go over one more, which was on end of day on the ES and of course the Nasdaq as well. All right. So what you had was the market. It retested this 81.06 and sprung it. All right. It sprung the 81.06 level right here and went down to about 80.70. All right. When it did this, meaning it tried to break, look what happened. When it broke, attempted to break, buyers stopped it. You see this volume? You see this buying? So that right there is a spring, all right? Because it's basically buying at the danger point, all right? And that's what a spring is. You're just buying, right at the danger point and slightly below support. So this is what happened. It tried to break, but the buyers came in, telling you, I'm not gonna break down. And then it offered the pullback. By the way, this is on what? It's like 2.35 times the average upward volume right here. So that, obviously it's a lot of volume. And then pull back right here. Look, no selling pressure. Look at the red, no selling pressure. Offering you the retest and then like a little trade, a little intraday trade. Go up, down, and we're done. All right, so that was the today's little trade. It's not a big move, but it's a trade. And if you know how to buy this, it's good enough. You can get in over here on the pullback and get out somewhere above the high. All right, so that was the first trade in crude. It was a very little shitty trade. I shouldn't say shitty. It was a little trade. It was a little trade, but a very easy trade. All right, now the next trade was on the ES when the market hit an upthrust. You see the UT? It hit an upthrust, and look what happened. See this? Right there. So what it's trying to do is it's trying to break out, but the breakout got sold. Right? So now you just wait for a low volume pullback. There it is, right there. And it gave a little trade. A little trade. All the way down here. Enough for a regular little trade. It's not a massive trade, but it qualifies rally pullback and a nice, it's not a massive trade, but it's a trade just like the crude one was. So I show you the spring on crude and the upthrust. Now, if you would ask me which one is supposedly the better trade, it would be this one. Why? Because it's an upthrust and a downtrend, which is very, typically the reward is much, much bigger because upthrust and a downtrend, all you need is to catch that rally down. That's going to be a pretty big trade. Whereas a spring in a downtrend might just set up the bear pullback. So it has to do with the reward factor. If you're trading counter trend, the probability decreases, the reward decreases, and it's just a little tougher. But those trades, I showed on crude, it can be done. Here you had selling, and yeah, that's it. There's nothing really more to cover. How I knew that this was, how I was expecting the rejection here is because you had a level. And that points me to the final thing, which I'm going to close this video out on. All signals are random unless they have a level. Again, if you see the majority of systems that people create, the majority of stuff that's online, the majority of indicators and all that, they are what many of these folks still haven't realized, and it takes like a long time to figure this out. But if you know what you're doing, you figure it out, and that is all lower time frame signals, all of them are 100% random unless they include within the signal a higher time frame level. The higher time frame level filters the signal. And what does it filter? It filters out a lot of uncertainty, automatically increasing the probability. Why? Because a signal can occur anywhere in a chart, but the fact that it occurred at a particular level, that is different, because now you have a particular level involved plus the signal, and the probability is on your side. So it becomes less random and increases the probability of success. So if you're doing signal shit, just understand the importance of levels. Signal without level is totally random, because the trades can occur anywhere on the chart. They can occur in anywhere. Fluctuations can occur anywhere. But when they occur at levels, it's a different story. All right? And also, it takes time and patience, for those levels to get hit. Because, above any level or whatever, there's always liquidity and things like that. I'm not going to get into all that, but the point here is you have to have a level. All right? Take care. Bye.